Good morning traders, welcome to Failure to Displace. In this video we're going to take a look at the London trading session on EURUSD. We're going to take into account the ICT 2022 mentorship model and also take a look at our silver bullet entry at 3 AM. I've marked out some buy side liquidity as well as using the liquidity tracker, which is giving us our green session levels of liquidity. So in green these are untapped session highs and lows. And where they've been shaded in red, that means the price has taken the liquidity at that area. So we can see we did have buy side in the Asia session, which we have just taken prior to the London Open. This orange shaded box is the new week opening gap for this week. So again, just a point of reference, something we need to keep an eye on, see how price reacts there. We do have some buy side liquidity here, which from our New York PM trading session, we had some relative equal highs here. So there's quite a lot of liquidity there. And then the liquidity tracker is showing us this as the PM session high liquidity. However, you do need to have some discretion here. That's really not a swing high, so I wouldn't be too interested in that particular green line. I'd be more interested in the swing high that's been put in on the candle before. So this high is our buy side, and what's nice about this high is it's very close proximity to the New York PM session, New York AM session highs that were put in on Friday, and ultimately Friday's high as well, which was put in the gap time. We've got lots of tightly packed liquidity up here, giving us a very strong draw on liquidity in my opinion. So going to this with that in mind, lots of relative equal highs up here, so potential for those to be swept, and obviously a very strong displacement looking 15-minute candle coming into the London Open. Let's drop onto the 1 minute now and start analysing price as it progresses through. I'm going to use bar replay on this just to step through this and see any potential entries. So we can see that we have displaced through the Asia high. So that's quite a good sign there. It's not been a weak run on liquidity. We've got strong displacement candles and we're displacing through the high at the moment. So that kind of reinforces the bullish bias. Big bullish fair value gaps supported by big bullish candles as well. So looking at that, we should again be looking more for buys than sells. And again, given the fact that we've got all this tightly bunched liquidity up above us here, kind of all makes sense. It's a solid narrative, I think. So coming into the session, we would be looking for some kind of sweep of liquidity for a 2022 mentorship long. Sweep of liquidity, break of structure to target those highs. So the obvious, at the moment, break of structure, or sweep of liquidity, sorry, would be this gap time low for sell side. So we can keep an eye on that and just see if we get a sweep of that liquidity for a 2022 high. So we sweat this. We are pulling back into the Asia range at the moment. We're not pulling back inside with displacement, so I wouldn't be switching my bias at the moment. You can see the candles on the bullish side are much larger than the candles coming down, so it's not like an energetic move back into the range. We've got this fair value gap here. Just keep an eye on. Got a fair value gap here that it's just been closed through. We're into this lower fair value gap. Are we going to get a sweep of this liquidity for a possible 2022 entry? So we've not taken the liquidity, but we are pulling back above this fair value gap now, having respected this lower order block. Your break of structure for a potential 2022 entry would be up here. So if we break that with displacement, we have got some fair value gaps here as potential. In fact, we have a balanced price range at this point. I'm just going to change that to yellow so we can see it. So in the yellow there we have a fair value gap, bearish fair value gap coming down, followed by a bullish fair value gap coming up. So where the two overlap, this would be a balanced price range, nicely at the 50% of this fair value gap as well. So that's an area where I would expect to see some kind of a reaction. So if we can get a good break of structure, there could be potentially a long position based on this balanced price range and respect of this fair value gap. So we've broken, we've got a candle close above it. I wouldn't say it's massively bullish, but we have broken above, that's more like it. So we're pulling away from this breaker structure now, leaving a fair value gap over the liquidity area. We can potentially look for a pullback into a discount. Optimal trade entry is down here, and our 79% retracement is bang onto this balanced price range. So I'm sticking to my bullish bias here. We are underneath the new week opening gap still. So there's no pullback here, so we're not going to get tagged in for a long here. We've just swept the gap time high, just underneath our liquidity that we'd marked from the New York PM session. So that is our current daily high that we've just taken. Strong move straight through those. So again, bullish momentum just pulling us up. We can get rid of a lot of this. So our fib is just indicating our premium and discount essentially of this London range. Our discount is at the top of the new day, new week opening gap. We've got a fair value gap just into a discount. Optimal trade entry is currently over this structure here, so specifically a order block here. So that's just something to keep in mind. Okay, so we're now coming into the silver bullet hour. We didn't get an entry for a 2022 mentorship, although we never actually swept this liquidity anyway. So the entry was really based on the fact that we'd left a balanced price range down here. We did sweep this liquidity, but I wouldn't say that was significant liquidity at all. And so moving on to a silver bullet entry, really we're going to be looking for... Now let's just get rid of this. We're going to be looking for a displacement up to take out these equal highs, I would say. So the previous day's high at the moment. So tap the top of the new day opening gap. Okay, we've pulled back in. So we've got a fair value gap here. We are into discount of the range, fair value gap and order block at this area. So worth keeping a check on how price respects this. Just above optimal trade entry as well, so our 61.8, our 618, sorry, fib, 66 fib, just over this order block. So big respect of that fair value gap. Pulled away nicely, we are back into a premium. If we get a fair value gap going higher, displacement above these highs, then that could be potentially a long silver bullet entry. So there's your fair value gap. So potential entry here. 5 pip stop, 5 pip take profit. If we get a pullback, nothing there. Another fair value gap here. So silver bullet, you could follow this up now, because you've identified this draw on liquidity. So it's quite a clear draw on liquidity in my opinion. So I'll be happy to follow this up to around this point. I don't really want to be getting any closer because ultimately taking the high 7, best case 9. Yeah, so This would be my last point of entry for a silver bullet. So it's not taken those highs yet. It has taken this buy side, but basically it's created relative equal highs here. So this is just more indication that price will go higher, in my opinion. So I would still hold this. The basis is that I wouldn't want to go any higher. This is still covering this fair value gap into this order block. So my 5 pip stop loss, I feel, is okay. It's not the best. I'd prefer it to be down here, but I'm just going to stick to the silver bullet entry model. Okay, so that's tapped us in. We've just touched this first fair value gap. Let's see what reaction we get here if we can take the highs. Digging a bit deeper into it now. Out of interest of this price leg from this low, wrong one, from this low to this high. Yeah, price just tapped the 50% before it started coming away of this price leg. Let's see. Not quite taken profit there. So that has taken profit. So there is our 1-to-1. You would ultimately be expecting these highs to get ran. So you're back in. Pulling a bit deeper now. So if you hadn't have closed out at 1-to-1, or at least taken 50% of your position off to make yourself risk-free, this would not be a nice position to be in now, because you'd be sat in drawdown. It's not stopped you out yet. You have this large fair value gap. We can see it's closing below the 50%, and that would have stopped you out. So there's a potential for a 1-to-1 in this area. If you were sharp on a silver bullet, we are now pulling back. We have got relative equal highs here. Respecting this order block. So we can see we've had this pullback. Essentially price pumped up beginning for 15 minutes. We then pulled back for 15 minutes, and then at 3:45 we can see we're getting an injection of volume again at 3:45. So this goes kind of back to some of the Stacey Burke stuff that I've watched with the 15-minute cycles. So we're into the last 15 minutes now of the hour, and we can see price is now accelerating to take, well, potentially take these equal highs, so this liquidity that it's built up here, and hopefully the previous day's highs as well. This is where, as I said before, my stop loss at 5 pips is probably not the most sensible option. You would have preferred to have the stop loss below this order block. So maybe it's worth reassessing your risk management to make the stop loss more logical. So at 6.6, so 1-to-1 is up here. You would have had to sit through some drawdown, so I would have been already out of the trade. So we have sat down through some drawdown now. Price is pumping up. Ultimately gets the 1-to-1 there, has taken the equal highs. Just taken the session high, so it's not taken the session. Sorry, it's not taken previous day's high with displacement there. And he's pulling back. So that is not a strong bullish sweep of liquidity, is it? Again, silver bullet, you would have made a 1-to-1 if you had a more sensible stop loss than I had as well. So you could have had the 5 pip stop loss, close out 1-to-1, or a 6 pip stop loss, close out 1-to-1. There's, for the 2022 reversal now, let's just get rid of some of these because we've taken them. If you were waiting for a sweep of liquidity in one of the session highs or session lows, we've just had that. However, your swing low break of structure is all the way down here. So in an ideal situation, we would want price to sweep this high again to give us a better break of structure, something a little bit higher up the range to get us in, because at the moment price is going to have to drop significantly before you're going to get an entry. So this, although we've swept this, this is a short-term low. This is an internal swing low. I wouldn't take that as a break of structure. So yeah, market structure shift potentially, but it's not a break of structure because your break of structure shift is right down here. So we're going to see this high taken. Yeah, so we've taken the high. We've now taken the high with displacement, in all fairness. Again, your swing low for a reversal is here. We are just about to pop out of the session anyway. It doesn't look like there's going to be a 2022 entry at this point. So these are all relative equal highs. I wouldn't take this as a swing low. Plus there's no displacement coming down, so the bullish candles are much larger than any of these. So you wouldn't want to be trying to take an entry based on that swing low there. Although this candle is slightly higher than the rest of them, so that is officially a break of structure. You can see that the displacement is bullish. We've not got bearish displacement here. And we're outside the session now. So there was no 2022 model for an entry inside the London session. The only possible trade I could see would be this silver bullet to take out the session highs and take out the previous day's highs, I mean. So that would be the trade if you were trading silver bullet. Before we wrap up the video, I just want to run you through one theory that Stacey Burke mentions a lot, which may be prudent and is something potentially we could look to implement moving forward. Stacey Burke's advice is to master one setup, but then wait for that setup to occur across multiple pairs. So we've seen today on EURUSD that the 2022 model didn't set up for us. There was no 2022 entry. We could have potentially bagged a one-to-one on a silver bullet. Stacey's method would be actually stick to the 2022 entry model, but we'll look at it across multiple pairs to see where it's going to occur. And when it occurs, you know that you've got the edge then on that setup. So I'm going to run you through now the rest of the major pairs that I monitor. And we're going to analyse where the 2022 model turned up. So we could have ignored EURUSD, but we could have potentially taken an entry on pound USD. So we saw on the pound that we took a sweep of the Asia low. Price aggressively moved down, but then we had quite an aggressive buyback. So we broke structure here. We left a balanced price range with a fair value gap. Price tapped the fair value gap and then proceeded to accelerate in the opposite direction. So this signature, an aggressive move down and then an aggressive move back up again, is something that I do like to see. We had a break of structure, fair value gap entry, and price never came back again. So potentially on the pound, you could have been targeting the opposite side of the range, which would be the Asia high, or even looking for buy side to be taken later on in the day from the New York PM session. We can see price has pulled up quite nicely and is currently well in profit. So potential entry on the pound here based on, again, following the 2022 mentorship, looking for displacement over a break of structure. So we had a swing high, we displaced over that with a larger than average candle. So we can see the preceding candles were all quite small. And then we had 1, 2, 3, big push, big displacement over the break of structure. So potential entry. Adding on confluence, we had a balanced price range here for a potential long position. On dollar Swiss, there wasn't an entry. So I couldn't see anything on dollar Swiss. We did sweep the New York AM session low from Friday. However, we didn't get a break of structure long entry on here. So price has continued displacing lower before the end of the session. So nothing on dollar Swiss. On the pound yen, we did take out the Asia high we did put in the pattern that we'd like to see. However, there was no entry given here. So we took the high, pumped up, break of structure. We had displacement again, breaking over structure. We had a lot of displacement coming down, but we never got a pullback into this area for an entry. So nothing on the pound yen. Australian dollar is quite a nice clean entry. So we can see that we swept the Asia low. So this is our red liquidity tracker, which was the low from Asia. We pulled back, we broke structure, or we took liquidity here. This is a new low. So this low, if you check on the numbers up here, we can see the low here is 042, 68042. The low here is 68043. So this is a pip lower. So we did sweep the liquidity again here, which would make this our break of structure high. So we had this as a break of structure. So again, we can see big displacement candles in comparison to the ones that are closer to it, leaving a fair value gap. Order block in here, fair value gap as well. So potential entry with a stop loss below the low. Again, entering and looking to take out possibly these equal highs, gap time highs up here. Giving you a really nice 11.5 to 1 trade. So Australian dollar was lovely. You could have taken the session high. We've got highs just before here. So whatever the take profit would have been. But you can see the entry was solid. After sweeping that, we would just wait for the pattern to occur. Break a structure with displacement. Entry in. New Zealand dollar. So we swept the Asia low before the session started. So we had new sell side in here. Come down, we've taken this. We had no break of structure with displacement here. So there's no entry at this point. So we have the session low in here. Prices come down aggressively. Taking out the session low. Break of structure at this point. So this is our break of structure on this swing high. So we can see displacement, so a big engulfing candle with displacement. Again, displacement over this break of structure, which is really what we want to see. This turns this into a breaker block. So this would have normally been an order block to act as a resistance. It's turned it into a breaker block. Price comes back, fair value gap, breaker block. So this is a unicorn entry as far as I'm aware. Price accelerates away after tapping the top of the breaker block. Potential 3.8 if you were to take profit at these relative equal highs here, or potentially you could take it at the swing high if you wanted even more out of the trade. But again, a good solid 3.8 or 4-hour trade on New Zealand dollar. And then USD CAD, nothing happened. USD CAD, we have taken this low prior to Asia low, prior to the London session opening. When the London session opened, we've ran the lows. We haven't broken any structure with displacement. There is a displacement candle here, but we can see when we took liquidity, when we took the break of structure, which was this candle high, it wasn't an energetic move. We pulled back into the range. So yes, we've got displacement here. I wouldn't be interested in that. I'd want to see an aggressive move over this high straight away, and instead of this back and forth and then a bit of a meandering up. Price has come back down then aggressively, taken the lows, but it's failed to take out the New York PM session low. So there's nothing on USD CAD. So if we were just monitoring for the setup as opposed to just monitoring Euro USD, could be a more profitable way of doing it. Have one setup, multiple pairs, instead of one pair and multiple setups on that one pair. Something to consider. As I said, I did try this previously and got smashed up. It was a very difficult way of trading. However, I wasn't fully clear on the 2022 model, whereas now maybe because I've got much clearer criteria on what I'm looking for on the 2022 model, it might be something I look to implement moving forward. So I hope that was helpful. If you enjoyed the video, please drop it a like. If you have any questions, leave them in the comments section below. And if you want to see more analysis like this one, I'm dropping videos daily, so please consider subscribing. Thanks very much, guys, and I'll see you in the next one.